lot going on. Obviously, there's been a lot of turmoil in the market the past 24 hours. Um, Maybe we want to talk with what's going on with the bank run, I guess everybody's calling it now.
Which one?
Which
There's
one?
two.
But it's like, I think the funny part is that I never really heard much about these banks before. Tammy, I know, I mean, you used to be in the banking industry. Any thoughts about what's happening and where did these banks come from?
Yeah, that to me, when I look into these things, I was looking at the one this morning. So there were some charts out there that this bank, the Silicon Valley Bank, is like top for the majority of their assets were in securities, and they right below them on this chart that I looked at, Silvergate was right below them. I have not heard of these banks, but it intrigued me, even with the whole FTX thing, with these smaller community banks, the ones that are in the farming communities and just very unassuming. And it seems to me that they're picking certain ones for certain things. So I was listening into the space last night. I think you may have been in there as well. And I was trying to grasp everything that they were talking about, but they were actually talking about it on the news this morning. So when when these things happen, I know that it obviously does shake people up. So I'm still looking into it further. I just heard about the one this morning, the Silicon Valley Bank. So how these pop up, I don't know, but it's just not a good look for us, and it's not a good look for them either. So it is concerning. I'll say that.
Great points. Yeah, I think. Go ahead, Nico. I was just gonna say that Silicon Valley was like down. I don't even know how much percentage, but go ahead, Nico.
Silicon Valley's down like 70% right now. Well, last time I checked, it was 160 yesterday. It's at 40. So Silicon Valley Bank, that's for a lot of huge tech startups. Has nothing to do with the crypto industry. Like, this is a lot worse than people think it is right now. Silvergate isn't the news. That's this one. From what I'm reading, it's they don't have $67 billion, and they're selling things at a loss at this point because they can't. Like, it's unbelievable. They just took a $2 billion loss, I think, overnight. I This is huge with this bank. Silvergate was a joke.
You're saying Silvergate took that, or you're saying
No,
that
no,
Silicon
Silicon
SVB.
Valley took this hit, and
got it?
Silvergate was the joke. Silicon Valley, this whole thing with them, they're the ones that apparently VCs depend on them for all their capital, and I guess it's a funnel, like, and they've been custodially of what all of that, and they're short $67 billion. That's a lot of money.
Wow.
You know what? It's better now. As much as I hate to say it, but some, that's what VCs a lot in the end. Yeah, they do get their loans from there anyway. Uh, but it's better now than later because we all kind of knew some shit like this was going to happen. And I was hearing some stuff about maybe a bailout, but I don't know. I don't know if they should just let them go and let the government take one on their face like they've been doing to the whole crypto market, and just start fresh, because you can't just keep bailing out every time somebody has an issue or a bank did something wrong, because there's no doubt in my mind there was a lot of fucking crooked loans in there that weren't looked right. And I think Nico and I were talking one time this morning, actually, just the Fed raising the rates the way they did, it was just way too fast,
No,
too
they did
late.
it slow. They did it. They waited too long. They should have raised the rate, because now they did it too fast. They just did it too late, and then they raised it too fast, and now nobody knows where they're going. And forget it. Like, this is a big mess. This is
Yeah, I
really
just
bad.
It
wanted.
is.
Oh, sorry. I just wanted to add. Yeah, aside from Silvergate, Silicon Valley Bank, then there was also Dapper Labs. They were removing their ACH withdrawal options, so they were having difficulties with Circle. And then there was like rumors about JP Morgan and Gemini that they were ending their relationship. So this goes, I think, like all of this has happened in 1 week. Like all these banks and business partners are having issues. So what the fuck is really happening? I don't know. Go ahead, Tammy, and then Death.
Yeah, and I agree with what Leo's saying with the bailout. That is the frustrating part. And honestly, that's the type of thing that pisses me off when I see that happen. Because even when this happened with the banking industry back a few years ago, and there were bailouts that were done, it irritated me because I'm like, really? Because you see what they're paying those high executives that they have there and the shady practices that they were having. And, at that point, I was in the credit union realm, but I spent so many years and I know the practices, I know what they do. And some of them get so heavily tipped on the lending side and they're not bringing in what they should be. And it just creates a mess. And I just, it's so frustrating to watch, even being in this industry now, because they're so quick to point the finger. But I'm like, yo, you guys have got some shitty practices too.
Yeah, well said. Go ahead, Death.
Yeah, and it's terrible because it's a domino effect. We've just like how you saw the Silvergate as the first one, right? It'll most likely continue as a rollover because just as Tammy said, there's a lot of lending that goes out, and so when one person goes down, now we have FDIC insurance, which doesn't have a ton of money to capital to actually back them up, but people get minimums, that they have put into it, right? That they and that pulls out, and that's why we're seeing, them liquidate themselves because they essentially have to cough up the minimums because they're going to be closing down, but it puts other people in positions that lent them money that don't get that full amount back, and so on and so forth.
Can I add one thing? Oh, I'm so sorry, Dow. Can I just add one thing real quick to Death's point before I forget with the whole FDIC thing? And I know I've said this before, and I just like to reiterate it and bring it up again. With the FDIC insurance, please educate yourself on that. When you are with a credit union, you have NCUA insurance, which is it's basically the same thing as FDIC insurance, but they call it something different. So it is the $250,000 per owner, not per account. So just go on and read that and understand, because if you are the sole owner of an account and let's say you have $1 million sitting in it, it's going to be covered for 250,000. I think some people think that, oh yeah, I've got FDIC, I'm fully covered. You are covered, yes, but not necessarily in the way that you think that you are. And they do have calculators available so that you can see how you can actually, add other owners, obviously spousal, or if you have trust accounts, you can add a trust. There's a lot of different things that you can do, but please educate yourself on that. And don't be scared if you go into a credit union, you're like, wait a minute, they don't have FDIC insurance. They do. It's just NCUA insurance. So it's just called something a little bit different, but they both cover the same way. And if you have, I know a lot of people have IRAs through their bank or their credit union, those are separate. So that would be if I've got $1 million sitting there in a savings account and I've got an IRA, let's say that has 250,000 in it. That IRA is going to be covered 250,000 and your account is going to be 250,000 as well. So don't let that confuse you either. Thanks for letting me get that out.
I have a quick question just to make sure I understand the situation, right? When it comes to the Silicon Valley Bank, what I've heard was that it's a liquidity issue, but not an insolvency issue. Meaning by that they have the assets on their books, but they invested and they can't just take them out because they have to mature, like I guess like MBS, mortgage-backed security. Can someone confirm, or is it actually like insolvency where they don't actually have the assets on their books?
No. So this is where the banking Oh, sorry, Nico, go ahead.
They took the assets that they have were at a 1%, 1 point something percent loan, and if the Fed right now they're at like 3 point something percent against their bonds, and they have to dump them because if the Fed raises interest rates anymore and anything, like, they're screwed. They're not going to be able to pay anything. It's not going to be.
You are correct though, Dow, right? And this is right, banking regulation, right? This is why the banking sector is so highly regulated, right? Because they're in the position where, yes, you're not completely out of luck, but what happens is it's like rotating doors. So in the sense of if I'm somebody who's a business person, I most likely have accounts at multiple banks. And so what I'm doing is I'm taking loans from multiple of these banks, right, creating debt, and basically just paying off the interest at one or the other to keep fueling whatever business or whatever opportunities things I'm pursuing. Now, if one of those entities goes down, and that was one of my funds that I say I had $1 million in, and I'm only getting $250,000 now because they're liquidating themselves. Well, okay, so now maybe I can't pay this loan, and so you have large businesses, maybe hundreds or thousands of them, right, that are all doing this, and so it just becomes rotating doors, right? One closes down, the next one closes down, and the money's just getting shuffled and funneled, and right, everybody starts kind of panicking a little bit.
Great point. Go ahead, Leo, and then I'll go.
Yeah. So thank you. Like everybody was making fun. I remember one time it came out, Gianni, basketball player, but he actually opened up 50 bank accounts on, I guess, a contract he did with the NBA, and he emptied it. And he put, I think, was 50 bank accounts at 250 grand across the board, and everybody was laughing. But they'll get hit. A lot of these millionaires don't, like, they're smart, but they're not smart, and they don't really understand it all. But it was cool to see that, because a lot of people laughed, and I was like, man, this guy's a genius, because you never know when stuff like this can happen, and you're done.
That's smart though, Leo, seriously, because it is per institution. So, you could have one at Fifth Third Bank, you could have one at Bank of America, you can spread it out, and there you see more and more of that. And that's how I honestly used to, and that was the freedom that I guess I had in the credit union world to suggest that to people because they want to be covered. And I completely understand that. So that's actually pretty smart.
Oh God! Now I'm gonna have like 20 bank accounts, like I do crypto wallets. Got to spread out the wealth, spread it out. Oh God! Going back to that, but yeah, the banking thing, like, yeah, I don't know what's gonna happen. Obviously, the market is not, is not reacting well to it. But we'll see what happens. We'll see what happens. There's a lot of funny stuff going on. But another thing that I did want to touch on was the KuCoin lawsuit by the NYAG. And within the lawsuit, that she claims that she lumps in Ethereum with Luna and UST, calling them securities. Dow, how do you feel about Ethereum being lumped in with Luna in that lawsuit?
Yeah, I think you all can guess how I feel. But I think it's an important point, right? Because it's also Gary Gensler who went to the media and said that everything but Bitcoin is a security. So in his eye, including Ethereum, it's a security. I that's my two take on it, but I don't think those efforts are not coordinated. I think there's an idea that if all the three-letter agencies and the NYAG and the SEC and the Fed and all these guys come and say, "Hey, we don't like crypto and all those things are security," it kind of creates a paint a negative picture. But in my opinion, it's just barking, but there's no bite. Because if you ask the CFTC, and actually the chairman actually just said that, I think yesterday or this morning, that they actually list Ethereum to be traded on the futures market. So that's not them saying something to the media or prosecuting someone and making a case. That's a rule that they have. So to them, like, ETH is a commodity, and if it's not the case, they're doing something illegal. So the CFTC, if the NYAG or Gary Gensler are right, are currently doing something illegal, they're enabling the listing of Ethereum as a commodity, even though it's a security. So I think there's a lot of barking, but not a lot of bite to what the NYAG is saying or the SEC is saying. So that's my 2 cents on that.
No, I agree with you. Even I don't know about the NYAG because she always seems to get her way. But as far as like the SEC, even with with the Voyager Binance US buyout. Like this week that happened, that the judge ruled in favor of Binance US, saying the SEC had no merit to what they were claiming. So, but now it's like, now the DOJ is trying to block it. So it's like, they're just trying to throw whatever sticks, and really there's no merit behind what they're claiming. Now, as far as the New York AG getting involved, I don't know. They already don't allow the purchase of a lot of things in New York. What's to say not Binance. What's to say Ethereum won't be added to that list? Like, it's just crazy. But, you know, New York needs to get their shit together. Go ahead, Nico.
So, the whole thing with the New York AG is she's been trying to do this. I've been saying this for a long time. And all right, now we're going to circle back to, I have to, because one of the ways they did attack the crypto industry was through the 10Ks. That's why Silvergate is having all these problems. They added all these regulations and they didn't come out with their 10K, and it caused that was part of the start. And Silvergate is a lot more important than people think it is for the crypto market, because it allowed fiat to crypto trading 24/7 in the US. Now there's no US based way for us to really do, like, it's only the exchanges, but the exchanges were doing it with them. So now who's going to do it for the exchanges? It's a messed up situation what happened with Silvergate when it comes to this, at least with the regulatory issues, because they did attack them, with their pockets.
Yeah, I don't know what's going to happen. But as far as like just all the exchanges getting sued, it just seems like they're hopping around from exchange to exchange. So now Kucoin is the topic of the week. So we'll see what happens with that, and with the whole NYAG thing. I'm sure the BTC maxis are loving it. Oh, speaking of the BTC maxis, where's DeFi Daniel? He actually he didn't make us, but he encouraged us to join Noster, which is a pleb platform, I guess you want to call it. And they have these Nest, and we were in a Nest, and while we were there, they upgraded the app, and they're kind of like spaces. I'll put up a screenshot so you guys can see it, but it's funny, like when you join, you're a random ostrich, and then you get like some type of BTC maxi name like Satoshi or Roger or I don't know what else, but it's pretty funny.
Just when I signed in, I was driving and I saw it pop up. Well, I was sitting at a light. I shouldn't say I was actually physically driving at that point, but I was sitting at a light and I'm like, I don't even know who the hell I am in here. Like, I couldn't even tell, but you're right. I think it was an ostrich and I had some random ass name. I'm like, what is this? It was very weird. So I just got out of it and I thought, no, I'll check this out next time.
Yeah, and if somebody invites you to speak, it automatically brings you up. It doesn't even give you the option, but they're still working on it. They made if you would have seen, I put a pic of the UI. If you would have seen the UI before, it was like 1980. So while we were there, they're like, hey, you guys are the only Nest. Can you reboot so that we could see the new UI? And we're like, sure. So we were the first Nest under the updated UI interface, which was pretty cool.
Oh yeah, DeFi Daniel was the first host on the new UI. Where is he?
Yeah, I don't know. He's probably sleeping. I think he was
he's running late.
He what?
I think he just said he's running late.
Oh, okay. Okay, cool. Yeah, we'll wait for him. But yeah, we'll see what happens with ETH and the NYAG and all that. Switching it up a little bit more in motion since you're here, did you guys hear about the Avalanche and TSM announcement? I know you're a gamer. You like gaming. Are you familiar with TSM esports?
I'm not. I'm not a gamer so much as I really like kind of messing around and developing game engines.
Gotcha. So TSM is like this huge Web2 esports brand, and they actually partnered up with Avalanche. They're going to have a subnet on Avalanche now, and try to use that to bring Web2 gamers into Web3. So it was a huge announcement this week. Pretty exciting to see from Avalanche, which kind of brings me to like another point, because I saw something else about Cardano, how they're implementing a side chain. And I'm seeing that a lot in the space. Like I'm seeing a lot of chains like now thinking about implementing side chains, or Avalanche uses subnets. I know BNB is also looking into side chains. So Cardano kicked off a dev EVM kit where you can create your own side chain for Cardano. So I know we got a couple of ETH maxis here. So what do you guys feel about these side chains that are now like, is this going to be the new meta now?
Real quick, I just want to say, like, first, yeah, congrats on the Avalanche with TSM, because it's a massive win for them. I don't know too much about that, but it seems like it's like if you're into gaming and high competition gaming where people actually like go to events to watch players fight against each other around the world, those are actually like as big, if not bigger than, events from the NBA or the NFL, the massive events. So congrats on Avalanche. I mean, I would expect the Immutable X to pick them up, but I don't know. They went missing on that biz dev. But when it comes to Cardano, I'm glad that you said sidechain multiple times in our rollups. And the difference in sidechain, at least as far as I can tell,
Yeah,
I don't know
what
if
is the difference? What's the difference between an L2 and a side chain? I kind of see it like the same. I don't know.
they're kind of similar, right? The same family, right? But it's not exactly the same. So let's take Polygon, for example. Polygon is a sidechain of Ethereum. And what that means is that they have their own set of validators that provide the security for Polygon, right? But in the case of a rollup, the security that Arbitrum and Optimism leverage is the one directly from the Ethereum validators. So it looks the same if you're an end user, right? Like your MetaMask it points to the same address. You can kind of just change the network. So the end user, it looks the same. But in terms of architecture, there's huge difference because in one hand, the sidechain has their own security, so their own set of validators. And in the case of rollups, they're leveraging the layer one for the security.
But what do you mean by leveraging? Who's actually signing the transactions? Isn't it a different set of validators?
Well, in the case of rollups right now, you have what they call a sequencer. So basically, there's a node that's responsible for ordering a transaction and then passing them down to Ethereum. In the case of optimistic rollups, they're not verified, but there's a 7-day windows when they can be contested, right? But the reason I say the security is leveraging, or if they're leveraging the Ethereum mainnet, is because it's the validators who are verifying those transactions, right? In the case of ZKs, they verify them right before they pass them down to Ethereum. So there's like a second layer of security. But fundamentally, the security is provided by the validators of Ethereum for all the rollups.
I don't know if I'm buying that, but
yeah, Jess, I can
go ahead, Emmanuel.
on this. So the key thing is we have to separate like a lot of the marketing fluff from like the fundamental technicalities of it. And fundamentally, from a bird's eye view, rollups and sidechains are fundamentally the same thing. They are all independent chains. The differences they have is with regards to their bridging mechanisms. So with your popular rollups, aka mini ledgers or partial blockchains, they have what we call a validating bridge, which gives users on the other chain a unique opportunity to kind of exit out of the system. So we call these things escape hatches. So if you lock in your ETH from Ethereum to, say, Arbitrum, the unique aspect is the fact that the validating bridge can allow you to process your transaction externally to exit out of that system. With sidechains, you don't have this. So with sidechains, you have a completely different bridging mechanism. So the second your funds move over, you are at the mercy of the validators on the sidechain. Whereas with on a rollup, the validators, pretty much the sequencers, still have something to up. You pretty much have a way around them. So that's like the fundamental, the crux of things. When it comes to inheritance security, and this is something that we've been talking about with Kelvin Finta, Togru, Shibarium, and many other people on Twitter, if you follow our posts. But we've been trying to narrow down what inheritance even means. And what you've come to find out is that for the most part, there's no real such thing as inheritance. There's only an extendability of security guarantees, such as data availability, where you dump the data onto like an underlying chain, and then you still have to decide to pass this data off chain. The most you can get to something like inheritance security is if there's a scenario where you have native bridge assets. So when you move your ETH from Ethereum mainnet to Arbitrum or Optimism, the fact that you are extending the state of Ethereum onto that rollup is what allows you to then kind of exhibit quote unquote inheritance. But yeah, no, but marketing is different. Like you get these chains marketed differently, and then you dive in and you find out it's something else completely.
Yeah, go ahead, Emotion.
I was going to say ZK rollup, because the proof has already been validated. They don't need a challenging time period.
Yeah, and add, just to add something to that, right? In the case of a side chain, right? Like if you're tracing the transaction, it's on that chain directly. In the case of a rollup, yes, you have the transaction on Arbitrum, but it also get passed down to Ethereum. So Ethereum is your settlement layer. That's why it's such a big difference.
There's basically when you're playing with. Oh, go ahead. Sorry.
Yeah, no. So with rollups, you don't, because it beats the points if you're throwing the transactions on the Ethereum chain, because the transactions don't get re-executed on Ethereum. What you have with optimistic rollups are you have data being thrown onto the chain, and in the event of a fraud proof, this data is then re-executed on. So 9 out of 10 times, or 9.9 out of 10 times, this never has to happen. So there's no processing of rollup transactions on the Ethereum chain. All right. With ZK rollups, on the other hand, you do have a validity proof or validity rollups, because we don't really do the ZK part. You do have the validity proofs on chain, but then you also have the state difference.
So where's the data for the Arbitrum transactions? Where's the data availability for Optimism for Arbitrum?
That's on Ethereum, but that's data.
Okay, and where is it for Polygon? Hold on. Where is it for Polygon? Is it on Ethereum or is it on Polygon?
Well, Polygon they have your own data availability layer, but it's on Polygon.
Okay, so that's what I was saying. So you know that it's not true what you're saying, but you still say it anyway.
No, the outcome is, so what you're missing is that the data is innocuous. The data is data. It's different from computation. You have data and you have computation. Rollups are off-chain computation, on-chain data. Data is the most quote-unquote harmless thing you're working with. And so to that point, pretty much everything that still has to happen happens off-chain. The main L1 is just a data dump. It's like cash.
But moving it to a side chain, you're completely disregarding Ethereum security. So whereas things like Optimism, Loopring, all that stuff, they inherit from Ethereum security. And if you don't do that, then what's the whole point of building on Ethereum? Just build your own chain then.
So Motion, when you're dumping data on Ethereum's data availability layer, data control layer, you are not inheriting security in the sense that the validators, i.e. the sequencers, can still fork the chain however they like. All right. What you have where the finality of the rollup is dependent on the underlying chain is an extension. That's as close to socioeconomic consensus as you can get. All right. But dumping data on an underlying chain doesn't give you the security of that. What you do have is tamper-proof resistance, if anything, with regards to what data is there, when the data is there. And you also get the ordering benefits. Depending on your setup, you get your censorship resistance benefits, but you do not inherit the underlying security. You're just dumping data. That's a key thing that a lot of people tend to miss around. And we're only now trying to like re-educate the masses. And we've got spaces and stuff, lined up for that. But you're dumping data. So that's like the most, I don't say pointless thing, but it doesn't have the weight people think it does.
No, I agree with you, Emmanuel, to a certain extent, because I've heard it from Vitalik itself saying that, apps are going to choose the type of rollups based upon they're going to choose what layer to settle on based upon the type of security that they need. So as you go to layer 2 or layer 3, the security does decrease. So I've heard it from the horse's mouth, no pun intended. But Death, go ahead.
Yeah, it's a good point, right? And I agree with what the aspect of what Dow was kind of saying, right? If you have this roll up, right, or you can just call it an application, right? Because essentially it's what it is. It's an application. If it's existing off chain but communicating with Ethereum but not using it for transactions, essentially it's just its own. It's like a siloed database, right? That it's an application that somebody's using that's centralized. Uh, that's why if you had a ZK rollup, you would use the main chain for the consensus for the transactions that would be occurring on the application. So that it would be more, you could say it's more decentralized then. And just like how Dow had said, the differences, and you made me wonder something actually, Dow, with Polygon, right? Is that the chain that rolls over the
them down to the mainnet, to Ethereum, just like Arbitrum and Optimism.
So
maybe I was mistaken.
Yeah, I just want to clarify for you. So with Polygon, what Polygon does is it sends checkpoints to the Ethereum network. Now, these checkpoints are unique bits of data that allow the Polygon network to call it bootstrap in the event of anything. Whenever the Polygon goes through like those shutdowns or reorgs or whatever, it has this dedicated layer, i.e. the Ethereum layer 1. This can be any chain. It can be Bitcoin Cash, can be Bitcoin itself, it can be whatever. But they have this default layer that you're able to scan these checkpoints and then know where to reboot from. So that's what Polygon does. They have the checkpointing and also the staking contracts for Matic. That's Heimdall, I believe, is also what's on the Ethereum chain. So they're still able to use the guarantees from Ethereum to, in a trust minimized way, benefit from from Ethereum.
Well, yeah, I understand, but is there not full history nodes, right? And so this is where like all the different hardware requirements come for each network. If there's no full history node or enough of them that exist, it's hard to know that information is 100% accurate.
Well, this is true. So there has to be history nodes because that's what you have in Fura and many of these infrastructure providers for. But then also in the event, like you can have history, but then there's state. So if you try to alter history, you'd have to alter state, and that's how you can detect forks. And that's what checkpointing is doing. Checkpointing checkpoints the state of Polygon on Ethereum. So no matter what comes up with history, whenever you need to bootstrap, you can at least have that guarantee of Ethereum that you're getting like the data that is not tampered with, and that data is a checkpoint.
All right, thank you. That answer.
Go ahead, Nico.
Nico. I just want to clarify something. When we think about blockchains, you have 4 core components, right? You have your network layer, you have your consensus layer, you have your settlement layer, and you have your execution layer. All right. Rollups, they pretty much leave behind the consensus and network layer to the bottom, and they focus on settlement and execution. Everything that controls your balances, that's settlement. Everything that shows what happened, okay, and was proved with digital signatures and whatnot, that's all in your settlement layer, and that's what rollups are. And from there, you can then slap on an execution layer like an EVM on OVM or whatever VM you prefer, or whatever runtime you prefer. And then you have like the generalized rollups you have. Without that, you pretty much just have payment rollups, or what you call payment chains.
Go ahead.
Specify.
All right, so sorry. Go ahead, Nico. Then I want to say a few words on that.
All right, so we ended up with this conversation because Cardano put out an ERC way of doing sidechains, and I'm guessing that this is because Cardano is so complicated that you can't put anything on top of it that started out EVM compatible. Is this why we had this? Is this what the whole? Because like I don't even know how we ended up going into ZK rollups. I feel like we have.
Yeah, that was the topic that we derailed from. Yeah.
Yeah, just wanted to know the difference between L1 and L2, and we got interesting feedback. So I
No,
have to.
yeah. My question was like, yeah, I'm seeing this rise of like side chains now. So is that the new meta now? Like, are we gonna scale up, or are we gonna scale to the sides?
Right. So that's a good question. It's a question of balance and trade off. So
Wait,
when
wait.
you work,
Let Dow go because he
yeah,
had his hand up for a minute.
Yeah, so I just want to make sure Nico had a say in that conversation. But I think the issue is that we get into some technical details that go over the head of most people. So maybe we can focus on the actual consequence. Right? What is the consequence of those trade-offs, right? In the case of a roll-up, right? And by the way, I think this is an important conversation because even Bitcoin is having their own roll-up, right? There's something called roll kit or roll-up kit. So I think they're getting into that direction as well. So it is an important conversation for us to have. So the consequences for end user, right, is in the case of an actor trying to roll back your transactions. When it comes to a sidechain, in the case of Polygon or the future sidechain of Cardano, they can basically try to get 70% or a certain percentage of the validators that maintain the security of that sidechain, right? So in the case of Polygon, it's a lot less validators and a lot less money and capital that you need to hack Polygon that you need to hack Ethereum. In the case of a roll-up, right, there is a time where your transaction hasn't been validated on the mainnet. So you could say that during that time, yes, your transaction not as secure as if you did them directly on the mainnet. But once they're rolled back on Ethereum, they're as secure as native transaction. It will cost the same to unroll your or to undo your transaction to roll them back. So that's why it's such it is a big difference. People will say it's the same thing, and not being honest. The security matters to the end user. Knowing that your securities are backed by the capital of Ethereum is a big difference than to say it's backed by the capital of Polygon or a smaller chain.
That's a great point. Before we get to the hands, there is a question going back to the Polygon subject. Let's clarify it once and for all. So, Dow, current state, is Polygon a sidechain or a layer? What is Polygon today? Current state?
For now and until the end of this month, it's a sidechain.
It's a sidechain, yeah. So it has its own set of validators. You have to bridge to that network. You have to bridge your ETH to its own consensus. Okay, and then future state. When ZK EVM rolls out, what will future state be?
They'll have both. I don't think they're going to kill their proof of stake chain or sidechain, but they'll probably incentivize people to move on to the ZK EVM like as soon as possible.
And ZK EVM at that point would be a layer on top of Ethereum.
Yeah, it's going to be the EVM for their ZK rollup.
Okay, what is that? Does that mean what I said, or what does that mean?
I think the consensus, or I think a lot of these chains are going into moving the ZK EVM as a layer 2 solution, and then the original stuff is going to live on top of that.
Cool. So I hope that clarified it. Current state, Polygon is a sidechain, and future state, once ZK EVM comes out, it'll be an L2, and then the sidechain, like Del said, might still exist. I haven't heard any plans of them shutting it down. Like, everybody would have to migrate over, right? Like, it's not going to be done automatically from anything that I've heard. But yeah, we'll see. Go ahead, Death, and then M. Or I don't know who was first. Sorry, go ahead.
You can go if you want, Emmanuel.
Oh no, you go, please. Yeah, I'll hang back.
What a kind panel. Go ahead, Death.
You know, I'm so happy that you're calling sidechains new meta. Although I don't know if I necessarily like the term, but it's something I've been talking.
I questioned. I didn't call it. I questioned.
Well, it's something I've been deeply thinking about for 5 or 6 years now. Because the biggest reason is why sidechain, right? And it comes down to it is these distributed systems that are interconnecting these networks. How fast can they transmit information, and right in a sense of a transaction speed? And so it comes down to it where if humanity, if our whole species was to be utilizing blockchain technology, we would need hundreds of thousands of different blockchains that would be all interconnected with each other. And the reason for it being is that every blockchain, every network is only as fast as its weakest link, right? And so unless you have basically the blockchain existing on just a centralized database that can do millions of transactions per second, you need all of these different sidechains which can connect with each other by APIs horizontally and vertically, if you can think of it like a topographic map. And what you essentially output wise is infinite amount of transactions that can occur per second, while all of these different networks can connect with each other, doing different transactions for different use cases.
Yeah, I think that's a great point. Go ahead,
Oh yeah, maybe Cass should go. I think maybe Cass should go then, because I feel like I might go on another time. I'll be fast. So the key to the sidechains and L2s over here, the traders I'll talk about, is pretty much flexibility and the notion of security budget. All right. With sidechains, you're able to exhibit full-on flexibility. You have your own consensus set, you have your own execution set, and you can pretty much do as much as you want outside of whatever permission or whatever. With the roll-ups, you have a different concept whereby there is that security budget that is focused on the validated bridge. So roll-ups are single node blockchains, or your single node mini blockchains. That's what they technically are, mini blockchains. And so you are still, while you still follow the validated bridge, you're bound to that. So you're tied to that security budget. Now, the biggest misconception people have about roll-ups is that you can't have transactions reorged or rolled back, something that Dow said a few moments ago, and that's not entirely the case. You have on the sidechain what we call, the roll-up, what we call speculative finality or partial finality. This is because a sequencer is a single node validator, so you can send in transactions, it can order them in whatever it likes, and then it submits to the chain. The $1,000,000 question is, what are the intervals by which it submits to the chain? In between those intervals, in between those intervals, it has every ability to reorg, to rearrange, to front run you, do etc. That's one thing. On the other thing as well, one of the good things about rollups is also the not great things about rollups and chain integrity. Because if you force include a transaction to a chain, and that transaction invalidates another transaction on the L2 that requires the same state of whatever you call it, UTX or whatever you call it, you will have the case of a rollback. So through the L1 and through forced inclusions, you're also able to still roll back the L2 chain. And you don't need to worry about the L1 rolling back. People talk about how L2 can only roll back if the L1 rolls back. That's like the worst case scenario. That's like far away. Like the close stuff is the stuff that happens between the sequencer and the entire rollup chain. Again, people remember this: rollups are independent blockchains. They are mini blockchains. They have their own settlement layer, their own execution layer. I'll put a pin on that now, and you can hear from Cass. Hi, Cass.
Welcome, Cass. Sorry if the panel confused you. I know sometimes they get a little bit technical, but I hope that was a better explanation.
No worries. Emmanuel and I go way back, and I know Death Ranger too. So I was gonna say, probably not gonna go deep into rollups because it has like all the nuances that I love, but could also be the most semantic depending on your priorities. And I kind of wanted to go into what Death Ranger was talking about. Because to me, like sidechains, right, and scalability, that word scalability has two definitions for me. And it depends on your priorities in the trilemma of like decentralization, scalability, and security. And for me, the most important of those three is security, and then scalability, and then decentralization, and then scalability in that order. Because I think sometimes we create these like quicker solutions to help that scalability aspect, right? So like sidechains helped with the big argument with Polygon was like gas, right? It's too expensive on Ethereum, so we're going to solve for gas. And so they're just like these mini solutions, but some are not necessarily calling Polygon short-sighted, but some solutions in general are a little bit short-sighted. And so that's why I think scalability has a dichotomy of a definition, because it scales in terms of speed, but for a smaller ecosystem. And when I think of scalability, I also think of mass adoption. But at the same time, the reason why I put that as my third priority in the trilemma is because there's so much being created and made and experimented And usually the brands that do come in are pretty cash grabby. And so like I have no interest in mass adoption. I have more interest in internal education, internal better like user experience, UX, UI, and then that will transfer into more people onboarding into the space, because I think that education is really asymmetrical to bringing people into the space versus actually getting the ethos straight within our ecosystem now, our small ecosystem now. So yeah, I'm really bullish on the underlying tech and understanding as best as I can on a technological aspect, but also knowing the nuances between the three so that it doesn't become semantics and we can actually grow in those three directions. Yeah, so that's all I wanted to say.
Couldn't agree with you more. It's all about finding that balance based upon what you're trying to build. Anybody else want to comment on side chains versus layer twos?
Well, I just wanted to say that's why I love your space, because this, just such great information that's shared every space, and this is exactly what Cass was saying. It's educational, it's knowledge.
And just to add on it, now I know I'll sound like an ETH maxi there, so I'll say it ahead. But it matters a lot to the developers. The developers are the one who kind of make those decisions, and the end users, to your point, Cass, have to educate themselves about those trade-offs. As of right now, most developers seems to be going the route of rollups, right? It's not a coincidence that Coinbase is going that direction. If you go on DeFi Llama, for example, and you look at the chains, like how much volume and TVL they're having, Arbitrum has been above Polygon for months, and Optimism is catching up to Polygon. So that's why there's such a pressure for Polygon to really move to the ZK to their like ZK rollups, because they understand that for developers who actually spend the time to look at the trade-offs, the one that Caps will say, because most developers, I think, that enter the space agree that this blockchain trilemma, that you can only do 2 out of 3 things in the blockchain, that you have to choose between security, decentralization, and scalability. And a lot of people look at layer 2s as a way to resolve that trade-off, right? So layer 1, you have you have security and decentralization, and then you have scalability at layer 2. A lot of developers seem to, there's a consensus, at least, or growing consensus, that this is the way to go forward. And so I think, it is becoming a conversation that users need to have, but it seems that developers have had that consensus for a while now.
And there's like Vitalik's got a whole roadmap for Ethereum going, like an entire direction where all of this is going. And pretty much everybody in the business, the consensus is that ZK rollups are what's going to be the end game for Ethereum. Even you yourself, Dow, you had a space with Arbitrum, with Optimism, with ZK Snarks, and pretty much all of them agreed that ultimately ZK rollups are the way to go. It's just that not everyone is there right now, advancement-wise. There's only like 1 or 2 players in the entire game that are kind of leading the pack on the actual technology behind it, versus just trying to onboard as many people as they can to whatever they got going right now.
Well, I'm going to give a different perspective. I think for Web2 brands, they're going to like the idea of having like a side chain or a subnet that they can kind of control and, have their own economy. And that's my personal opinion. Like, I just think it's going to be, different flavors for different people. But I like, we are seeing that, with all these side chains and, maybe even private blockchains. We've talked about that in the past. JP Morgan has been testing out their blockchain for, God knows how long. So while I get the ETH mentality that everything's going to be built on Ethereum, like we're not seeing that in real time. Like, that's my thing.
So Jess, I'm going to just take a quick moment to show Loopring, which allows you to build interconnected DeFi exchanges on top of it for any company that wishes to use it. All you got to do is put in $250,000 C for staking, and you can build your own exchange and own your own assets and be your own bank.
No, I'm kidding. That's crazy. That's interesting. Go ahead, Death, and then Emmanuel.
Yeah, I actually had two questions for Dow, but just wanted to comment on ZK rollups. I also think that a big thing with ZK rollups is a need, because if we're going to have networks communicating with each other, it's almost like a quantum encryption methodology of networks being able to communicate, because it's just hashes being traded back and forth, which is pretty cool to think about. But Dow, when it comes to Ethereum, and because there's a lot of transactions that occur on Polygon, do you fear that with this maneuver over from sidechain, where the consensus was done on the chain, to having the consensus mainly done on Ethereum, do you fear that that would raise the fees because of the amount of transactions that may occur?
Yeah, that's a great question. I don't think there's any rollup that can handle all the transactions, especially if we're going to get mass adoption. So there's going to be some bottlenecks, and I know it sounds crazy, but that's why we're going to have layer threes, right? It's probably going to be a multi-layer architecture. And even if we have maybe 10 ZKs that are high performance, and I mean, obviously there are two updates that are coming up this year for Ethereum after the Shanghai fork. One is called Proto Dank Sharding, and the other one is Dank Sharding. And the only thing it does is it optimize the mainnet for layer twos. So basically, it's like a 10x in performances. So if you're paying 40 cents for a complex transaction or Arbitrum today, after those two update, you should probably be paying 4 cents. And if it takes you 3 seconds for a transaction to be settled, it'll probably take like half a second, right? So those are pretty significant changes. But even with all that, and let's say we have like, ZK rollups like ready and then full capacity, we still can handle like mass adoption. So yeah, I get to your point. Like for sure, transaction will get a little higher, but that's the goal. The goal is to keep moving forward with layers and adding more, or maybe moving to layer 3 so that we can handle as much capacity as possible.
Yeah, the whole Cardano announcement caught me off guard because and I'll throw this over to Emmanuel afterwards. If Cardano was supposed to solve what Ethereum couldn't, handle, why are they now creating EVM side chains? Like, seems like he's come full circle. Charles?
That's a very good question to ask, and and so here's the entire thing right here. When the concept of Cardano was pretty much engineered in the beginning, it had a basic concept of separating the settlement layer from the execution layer. So Cardano, as you know it today, is still in its phase 1 or 0.5, like 50% complete stage. Well, that can be taken out of context, but work with this. And that pretty much is the concept about you have a settlement layer, you can do transactions, you can do everything that Ethereum regularly does. Now, the computation layer or the execution layer were a set of alternate chains that were made to plug into the main Cardano chain and do all the heavy computational stuff. Okay, so pretty much the plan was simple. First, launch a basic chain, and then from there, launch a constellation of side chains that all have their unique properties. If you want to sidechain for governance, you want to sidechain for EVM stuff, you want to sidechain for C-level stuff, you want to sidechain for identity stuff, you can have a sidechain for each and every one of them, and they plug in directly into the main settlement layer. So they're able to have this kind of shared security concept going on. And that's what's pretty much happened. Over the time, what they did was initially they wanted to keep the base chain very simple to do the very simple verifications and then let all the complex computations happen. But with time and demand, they ended up bringing in computation down to the L1. So what they did was a detour, and they're re-signaling back onto their main mission. That is to build this one chain, which is very simple, like Polkadot has with parachains and Cosmos has with Cosmos zones. It's pretty much the same concept. So it's not a case of, they can't scale or something, but this was always the plan. If anything...
Wait, this was always the plan?
Yeah. If you...
Okay, no, yeah. I believe you. You're more in the... That's why I'm asking. You're more in the Cardano community, so I'm gonna take your word for it, let's say.
Yeah, I actually wrote a thread on this. I have to find and pin it to you guys soon. But then, essentially, what was the name? When you go back to the original Cardano white paper, the essay that was written for Cardano, you had the CCL and the CSL, and that's what's happening right now. Now, something to think about when we're talking about this Cardano sidechain and thingy, That's just one angle. Cardano has the Hydra stack or the Hydra project, which is intended to be its layer 2 frontier. So on Ethereum, you have multiple people. You have Loopring, you have Arbitrum, you have Optimism, you know, and all of these people who are trying to build everything separately. Whereas with Cardano, they pretty much came up with the concept that instead of us all trying to build separately, why don't we have a defined standard or defined concept and build on top of that concept? And that's what Hydra is. So Hydra is like the mythological creature with many heads. You cut one off and more grows up, and that's the entire concept. So the end goal is pretty much one L1, which has a constellation of sidechains and an entire constellation of layer 2 solutions. So Hydra gives you state channels and has the capacity to evolve to become like plasma-like channels and roll-up-like channels. But the current level 1 they're on right now is with state channels, and they're progressing from there. So the sidechain toolkit is mainly meant for, like you said, Jess, people who want to come in and have a certain level of control. The businesses, the institutions that want to have their own chain, don't want to be beholden to whatever security budget or breaches of privacy that they have to endure as a layer 2. But yeah, just to clarify, it's always been the plan. I'll try to find a thread and pin it to the top.
All right. I see Jesus came in. I'll let him chime in before we move on. But yeah, I was just questioning the group, whether side chains are the new meta. So it's like the side chain versus layer wars right now. Avalanche is spitting out subnets. Cardano announced they're coming out with EVM side chain. What are your thoughts about side chains? Well, I know what your thoughts are, but share it with the group.
I think this is fucking genius, actually. You know I fucking hate sidechains.
Oh my god. Okay,
But
I didn't know you were gonna say
Jess, Tammy, first off, Endow, good to see you.
What's
Nico,
up?
Nico, I'm trying to fight you in the streets of New York. Where the fuck you at? Yeah, you know, my quick opinion on sidechains before Nico and I get into it. You know, I think that's the best move those alt chains have done in a long time. Because if you look at these more niche alternate blockchains, like, you know, your Cosmoses, your Cardanos, your whatever the fucks, they do have their use cases, they do have their utility, they do portray their value to a different sub-market, but it's a sub-market within a sub-market. Their audience is already extremely niche. They barely have any traffic except for the traffic they generate on their own to make their stats look good, right? While a lot of people may be holders of their tokens, those holders aren't actively using their networks. So what they're doing here, I think, is a good move. By allowing for EVM compatibility, they can attract over these large companies like your Uniswaps of the world to redeploy their smart contracts, because all they got to do is copy and paste their code on these sidechains to bring more network traffic over. Now, of course, the question is going to be, okay, why would I prefer to use Uniswap, let's say, on Cardano versus using Uniswap on Ethereum? And, you know, obviously, I'm sure the idea here is it'll be cheaper, it'll be more scalable, and it'll be something that will give value to the Cardano token holders. So they already have this huge user base that's just hodling their token, but not actively using their network. So this might be a great move for them to get that push to convert their token holders into active users.
No, that's a great point. That's a great point. And it's easier to deploy on multiple chains, and you know they can widen their user base. I guess I should have known you were excited because they are spitting out EVM compatible chains. So I didn't think that went through. Go ahead, Cass.
What's up, Crypto Jesus? Good seeing you. I laughed when you said Jesus entered the room and not a Crypto Jesus. Oh my gosh.
Only at Crypto and Coffee does Jesus enter the room.
We're blessed, y'all.
That's right. It's always Jesus.
I agree with what you're saying, but I think as well, to be additive, the winner is going to be the chain that kind of white labels it the best for the user experience and those companies and brands to come in. And two, like on that same point of the winner, it's also there's no competition. Like we're not supposed to be competing anyways. but it's really interesting to see like how brands are trying to like delve in without like really delving in and just kind of like dipping their toe. But here's also the reality check that I wanted to point out, which is ecosystems and the cycle and the circle of this. And I talked about this like a few years ago when platforms were also having these types of wars and trying to pull artists to every platform. And so one of the big like gaps that I see in the space is the disconnect between the artists or the creators and the actual developers. So you have these brilliant like developer ideas and these tech that are happening in real time, but then there's this war to try and pull the creator and the audience to it. And so you have all these smaller kind of little success stories, but also like total platforms that just drop off because they can't sustain it. And so you're starting to see companies like Avalanche push the narrative more towards the creators and try to make it creator centric, but like time will also show the retention of creators, because without the retention of the creators, then that chain, whether you're focusing on money from the NFT side or money from the DeFi side or money from just transactions, it's not going to be sustained without that portion. So it's a key part of the circle that I feel like the chains and the developers keep missing, but not that they're trying to miss it, just that there's a disconnect of value proposition. And so, yeah, I'm curious to see like what's going to happen with some of the names that we asked, and trying to stay like objective here and non-biased with the different chains and side chains. But that's what's essentially gonna win for me in all these sub communities.
I agree. And Jesus, go ahead since you just got here, and then I'll kick it over to InMotion. And
Thank you, Jess. I appreciate it. Cass, I think that was amazingly well said, right? You're looking at blockchains today like Avalanche partnering with Amazon. And, let's be real. You look at the user base on the blockchain today, and, Binance is probably one of the more unique ones because it's actively growing in this bear market because they do a great job at appealing to, more third world countries that experience large amounts of corruption and inflation. But aside from that, we're really just dealing with a niche subset, right? Ethereum is a wealthy person's game at the moment. Let's be real. We can't joke about that. That's the reality. So the question is, which blockchain is going to be the one that onboards the next billion users, right? That's what everyone's thinking about right now. Okay, we've set the groundwork. Now we've got this launch pad and we're ready to fucking spring. But who's going to be the one that springs the best? And that's why I really like this EVM push. But at the same time, everyone knows Ethereum is not the solution. That's why Ethereum has layer 2s. And in the future, we'll likely have layer 3s as well, right? What we do know, however, is that Ethereum is decentralized, Ethereum is secure, and that's one value proposition to build off of. But that's not necessarily what every user values the most. And companies like Amazon have taken quick note of that. They have decided that what users will care more about than security and decentralization is ease of use for the next 1 billion users, right? So they're taking more of a centralized approach, of course, but that's not necessarily a bad thing, right? Brings more users into the space. So I think it's very cool that all these blockchains are EVM compatible because we're going to see active integrations of account abstraction. And I wouldn't be surprised if the Cosmos team, because they are deploying this sidechain and they are, it's new, they don't need to do any major upgrades or overhauls and get consensus from the network because they're the ones deploying it initially. I wouldn't be surprised if they have account abstraction built into it natively, like we saw with Base. Actually, I'd be surprised if they didn't, to be honest with you. And what account abstraction is going to allow for, as we've talked about in the past, is to create those user experiences that are indistinguishable from Web 2. But obviously, the issue is we can utilize paymaster contracts to sponsor user transactions. For example, if I'm tweeting on a decentralized social media platform, if I'm a normal person, I don't want to have to pay every time I do the equivalent of a tweet. I want my tweets to be free. We can do this in Web3 today, but if we're doing it on the Ethereum blockchain, those protocols that are sponsoring those transactions, they got to subsidize $20 every post. That adds up real quick, especially you got millions of users. So it doesn't make sense to do it on Ethereum mainnet. While it might make more sense to do it on a layer 2, but still, your layer 2 is depending on if it's a ZK, which is roughly 10 times as scalable, or an optimistic like Arbitrum or Optimism about 100 times, you're still adding that money up real quick. So let's say that brings the fee down to 10 to 20 cents per transaction. Well, once again, you got millions of users, and those users are posting as actively as we are on Twitter. That adds up, once again, extremely quickly. We need more scalability. So no one really knows what is definite in this space. We all see the direction everything's moving in, but I'm excited to see who's going to execute best on that push for user adoption.
Great points. Great points. And just before I go to InMotion, I did put up, speaking about layer twos, they're popping up so fast, I can't keep up. But Shibarium is supposed to launch this week for beta. They announced it 2 days ago that it's going to come out this week. So there's only 2 more days left in the week. So that should be right around the corner. Is anybody going to be using Shib Layer 2? Go ahead, InMotion. Just wanted to plug that in.
There's nothing like onboarding people into a space where a cryptocurrency made as a complete freaking joke is creating layer twos.
Oh my God, you're gonna get canceled by the Shib community.
Jesus Christ! I mean, like I can't even with Shib. It's ridiculous. But what I was gonna say is that there's a huge push in layer twos and Ethereum DeFi to let people be the custodians of their own wealth and their own assets. And this is the ultimate end game of all of this, is for you to take power away from the current financial system, which is just broken.
Oh, I'm sorry.
I was like, oh my God, did we rug?
Yeah, I couldn't unmute myself. Sorry about that. No, that's a great point InMotion. I appreciate your input. So no Shib layer 2 for you. Got it. Go ahead, M, and then we'll get to some of the new speakers.
Yeah. So about the CoinMarketCap post, I think it's dated, because I think they posted this because this has been news ages ago, months ago, about this whole sidechain toolkit and everything, but they're only now catching up, which goes to show how little coverage that particular ecosystem gets. But then also, it's not the very first EVM related project or sidechain on Cardano. In fact, I was on the team that launched the very first EVM sidechain for the Cardano blockchain. That's the Milky Meter blockchain, and the team has gone on to release a rollup on the Algorand blockchain. And just to move further to transition away from the whole EVM thing, the future of a lot of these external chains, be it sidechains or mini blockchains, is not to stick to the EVM. The EVM is just one runtime environment. Platforms like Solana, platforms like Cardano, platforms like Polkadot have proven that there are alternatives to how we can handle transaction execution, how we can handle dApps, and it's all about making that more accessible to people. For now, EVM is the Windows for crypto. That's what everyone is using. But then there are the Linuxes out there, there are the Mac OSs out there, and they're yet to hit the scene. And so when you see chains like Avalanche or Polkadot or Cardano or Algorand, trying to bring in this flexibility, just know that it's not just for the EVM, it's to introduce other execution environments. And if anyone's in the Ethereum ecosystem, I would say look at the Fuel ecosystem, for example. Fuel is one project that is literally trying to disrupt this in the Ethereum ecosystem. About account abstraction, one, I have this thing against marketing. There's marketing and there's what is. If that's how I can say it. With account abstraction, what happened at ETH 4337 is think of that. I would call that, and many of us do call that, proto account abstraction. This is something we've been having discussions with Litecoins and many other people on the timeline to kind of get resolved. But at the end, this is still an app layer, an app level functionality that's running today. And again, to talk about certain limitations of, say, the EVM, Jesus just mentioned, hi Jesus, Jesus just mentioned account abstraction and being able to pay fees for other people and whatnot. But these are features that have been present in other ecosystems. The Multiverse X ecosystem, what used to be called Elrond, has had that in the form of meta transactions. The Algorand ecosystem has that today as a form of relay transactions. And there's so many other chains that do offer these functionalities that do improve the user experience for lots of people interested in enter Web3. The difference is that these platforms are not in the faces of people the way the EVM ecosystem is put in the face of people. So there's a huge disconnect between marketing and the good tech that people need. Ultimately, UX and DevX has to improve to make things more attractive. But currently, the incumbents in the media are pretty much leaning to one side. And until that changes in some direction, you're going to keep seeing the same recycled, takes and narratives on certain ecosystems. So just something to put out there.
So what you're saying is that the media is favoring Ethereum.
Well,
Got
yes. That undeniably. I that's quote me on that one. But then that has
wait. No, you got to wrap it up. We got a bunch of
I'm all wrapped up essentially. But as a blockchain person, don't marry one chain. Learn to learn and learn to explore. And that's why anyone who knows me, I've been in the Ethereum ecosystem since CryptoKitties. All right, I've had the honor and pleasure to bring in so many people into Ethereum, people who I didn't think I had, the ability to or the opportunity to do that before. But then, hey, I've done it. But did I stay in Ethereum? Did I choose to just, be, this max or something? No. I chose to find better tech. I'm like, how can I make things better for the people I've already brought in? Because I promised them one thing and things are going south. I need to give them alternatives. And so that's my personal thing. Everyone has their own reasons, but just keep an open mind and learn to learn. Now that's my pin. Thanks.
Could I do a quick response before we hop?
Yeah, go ahead, Cass.
Yeah, Emmanuel, we've been around for a long time. I always appreciate your opinions. But also, like, this is to my exact point of sometimes you get option paralysis with things like Cardano, where it's like, we've been doing this for a while, but how come no one's adopting it? Like, we have all these great options. It's like, I want the pictures on the menu. You have like so many words on this menu. Like, where's the picture of how this breakfast sandwich looks like? And so I think option paralysis is a big, like, blocker to adoption, even within this tiny ecosystem of Web3. This is not even including mass adoption. This is including who's here right now and learning. And I think it's also important to keep that open mind. Yes, we should all learn, but like, we're all nerds in here, and like, the level that we can get to doesn't always necessarily translate to even the person next to us or the people listening. It'll take a long time for this knowledge adoption to happen. And the difference between like the things that I fear in Web3 that's should be the difference of Web2 is like these paywalls. So for example, like Twitter has that notification. If I don't turn off 2FA, then my Twitter will shut down. Or I have to pay for Twitter Blue. So it's making me choose between my security and paying. And so this is now a financial barrier, the same way Ethereum has financial barriers to people that say, hey, Cass, I can only mint on Tezos because that's all I can afford. And I want to be a part of Ethereum and that ecosystem, but I can't play. I can't afford to pay to play. And so like these things need to be taken into consideration with, again, like security being the most important thing, because even if you do have people that can pay, like people that can actually participate and experiment and invest in different chains and different platforms, if they get rubbed and they lose a bunch of money, like a lot of people have, influencers have, then you're still losing that adoption, right? So the security has to be of utmost importance, and then the decentralization before anything else, or else you will not get that adoption even within the smaller Web3 ecosystem that we have. And to not replay the same thing of paywalls everywhere that Web2 is already making us have. So yeah, Twitter, if you're listening, I can't believe you're making me pay for security and turn off my 2FA. But yeah, I hope you guys choose wisely or get a new CEO. Don't cancel me, Elon, but you need to do better. I'm holding you accountable. And I'm done.
As a halfway Elon fangirl, you can still use Google Authenticator. I think they just removed the SMS 2FA, which is, I think it's from the security experts I've talked to, it's actually the non-preferred way, because if somebody could like swap your SIM and shit like that. So you can still use Google Authenticator for Twitter, which is what
100%.
I use.
Thanks.
Cuds, welcome. Good morning.
GM. Fun dialogue and great perspectives as usual. Jess, Tammy, and Dow Chemist. Cass, I joined right when you were talking about creators and creatives and the role they play in this ecosystem, and I think that is so overlooked. Right now, when we think about like L2s and access to certain protocols, Ethereum is certainly not that accessible to creators because gas fees are absolutely insane and they're never going to go down. People think that with the merge that gas fees are going to be solved, but the reality is gas fees will always be what they are, largely because the protocol was designed to fit certain use cases, and NFTs were certainly not one of them. And Vitalik actually speaks about this pretty openly. He discusses how he absolutely overlooked NFTs as a means of adoption, as a means of growth. It's great that we have, like, I think protocols like Polygon that are allowing EVM scalability. And it's just Polygon's having an amazing year in terms of like enterprise plays, right? Like Disney, Adidas, the NFL, most recently Meta and Instagram. It's amazing to see, I think, how Polygon is kind of taking the L2 playbook for scaling. But I do think what Emmanuel said is important about not being wed to any chain, right? So I'm not like a ETH maxi, Polygon maxi, or closed-minded to the fact that Cardano or some other chain might have some protocol development that allows it to be more accessible, right? Like we see developments all the time, such as like this new, account abstraction ERC 4337 development. Now all of a sudden it kind of changes up the game around like what the right wallet infrastructure could be or should be. And I'll leave with like an example that I heard from a podcast with Vitalik, like towards the beginning of the year. I can't quite remember what forum or channel it was on. It might have been Bankless, but he gives the example of like tech innovation with three distinct historical movements. If anyone's ever heard of like Esperanto, like it's this like ancient language that was made up. It's a made up language. And the idea of Esperanto was it was supposed to like unify humanity because the Europeans could suddenly have one main language that would then resolve conflict. Obviously, Esperanto is not what we speak today. Esperanto is basically this like archaic language that a few nerds and like other folks still somewhat experiment with. But they missed the boat, right? And then he gives another example of Linux, Mac, and Windows. And he's like, Linux has this certain application for certain people. Certain devs still run Linux, but most of the world runs on either Windows or Mac OS. And it's like important to remember that like Linux is still used and loved by some, but not all. And then he gives the example of the internet. He's like, the internet is massively the innovation that we can say more than Esperanto, more than any programming language, has had a massive force on humanity. And so if you always were wed to the idea that it's going to be Esperanto or it's going to be this operating system that unifies people or actually moves the needle, you'll miss the broader picture and broader point that it's going to be some application of all of those technologies like the internet that moves the needle. So we do have to stay kind of open-minded to like protocols and applications. And yeah, that's my TED Talk for the day. So thanks.
Quick clarity on your really good points. Like, I think we should definitely delve into all chains, but consumer behavior is where I'm saying over time we will witness adoption and retention. So, yes, people will be trying all chains, but the numbers won't lie where the consumers will show up and where the creators will create and where the devs will build. So, that's just some clarity on trying different things is consumer behavior.
Yeah, totally agree. Humble, what's going on, Humble?
Good morning. Can you hear me okay?
Yeah, you sound okay. A little bit echoey, but we can hear you.
Oh, I apologize for that. I just I'm new to this room. I truly am enjoying, as you said, the nerd talk because it really pushes my limits on my understandings on a lot of things. And when I came in here, there was twice as many people, and I know how much it can hurt our brains when we get really deep into what we're talking about. And I was just kind of hoping to give layman terms to those of you listening still that aren't really following and what it actually means to you. Why the layer twos and the roll ups, the side chains, why they got started in the first place. And that was because a lot of people have forgotten that Ethereum during a bull run is really expensive. And it's really hard for projects to build on top of Ethereum when their customers have to pay $500 for a $10,000 or a $10 transaction, right? So what's happening here is they created, like what you've learned through all this talk is, whether they're talking about the three, security, the consensus, and all these things, they're trying to solve issues, and these are developers that are talking about this, which is just awesome. But for some of us, it's really hard to follow. And what it means to you guys is that when these things continue to be built, it takes the load off of Ethereum, which It's not being built bigger or anything like Ethereum isn't. They're trying to, but it's not in time with what we need, right? And so they're building sidechains to take pressure off Ethereum. So therefore, you guys that still use Ethereum or Binance, the BNB chain, it's cheaper in the long run. You're not seeing as much productivity or filling of the nodes, right? Which increases the prices faster and higher. And so for us, these guys are saying we're trying to come up with a solution to not only make things faster for companies that want to build on here, but also more efficient and cheaper. So that way, when you want to make a $3 trade or transfer, it doesn't cost you $20. And so that's what they're talking about, you guys. And I really appreciate what you guys are talking about because I've been around this for 8 years now. And man, I am learning a lot of stuff. And so I'm going to be here a lot more often. And I appreciate you guys letting me up here to say hi.
Thanks for coming up, Humble. Jesus, what's going on?
Hey, so Humble, that was a great example. I really like the McDonald's example, honestly. Like, for example, like, let's say you got a nice town with a shit ton of people there. Your McDonald's is fucking packed 24/7. You add another one, you get some leniency. The lines aren't as long, right? But going back to what Cuds was talking about, by the way, Cuds, I love your banner profile pic. I actually have a $100 trillion Zimbabwean bill in real life. But anyway, going back to this whole Ethereum conversation, right? To deploy a smart contract on the Ethereum blockchain today is so fucking ridiculously expensive, even in a bear market, right? When we're talking, people remember those $100 gas fees you were paying in the bull. Well, in the next bull market, those are going to be thousands of dollars, right? So no one is really going to be transacting on Ethereum mainnet other than layer 2s settling transactions there, SideChains settling transaction there, and layer 3s, et cetera, et cetera. That's the future we're going to see. And that's the future Vitalik talks about, Ethereum as a settlement layer. Now, by structuring Ethereum this way, by focusing on this momentum first of building this decentralized layer, we can have a secure layer, and we can build on top of that. We can create scalability from there. And that's the Ethereum ideal, right? And yes, it is very much like a Linux. But you know what? Today, still, for example, if I'm a developer and I still want a smart contract on Ethereum mainnet, an NFT minting contract is going to cost me roughly $1,000 to deploy, which is a huge financial barrier to entry for developers. Now, let's look at a real more complicated smart contract. Let's say you wanted to deploy a protocol on the Ethereum blockchain. We're talking tens of thousands of dollars here, 30,000+ fucking dollars to create your own company and deploy it on Ethereum mainnet. That's a huge barrier for, software is supposed to be this thing. Anyone can learn anywhere in the world. Anyone can create whatever they want. And then, now without any financial barrier, as long as you have the knowledge, you can program anything you can think of. Well, that's not necessarily true, right? These limitations are still very much financial based. We can have all the infrastructure in the world, but if we have these financial limitations, we're never going to get to the 1 billion user mark. So yes, they can deploy these contracts on layer 2s. And yes, this will likely lead to a significant push to the adoption of layer 2s. And that's why, the big word is ZK and all the VCs are investing in all this bullshit. But I'm just excited to see this future because things are going to change very dramatically. And really, Ethereum is going to become like this network for just the ultra wealthy and for huge corporations settling their transactions and for huge protocols and scaling solutions.
Those are great points. Since we have been speaking about like side chains, which obviously means, some type of bridging mechanism, you have all these EVM compatible chains. Not sure if you guys have heard about the OFTs, so the Omnichain Fungible tokens, which basically allows like any application to function as a bridge. So as that token is moving across blockchain, it automatically burns it on one chain and so forth. So Trader Joe, I'm not sure if you guys are familiar with Trader Joe. They're native to Avalanche and branched out to a couple other EVMs. They actually converted their token to an OFT. So not sure if you guys have heard about that, but I was reading about that last week and I saw something about it yesterday, and it seems pretty interesting since we seem to be, having so many chains that are EVM compatible and so many applications that are deployed across multiple chains.
They're taking some liberties with that name.
That's another very interesting one, actually. At Ethereum Denver, I met this company called Axelar, and they're working on bridging technology as well. And we all dream of this, interoperable future where we can communicate seamlessly across chains. But where we see the most security compromise is in bridges, right? We've seen bridge hacks for, tens of millions. Hell, Wormhole was hundreds of millions of dollars. And ultimately, there's huge security concerns here. But there are many companies like Jess, exactly what you're talking about, that I've seen all of a sudden that are taking a very different approach to bridging. Hell, I've seen some that call themselves the bridge without bridges. As people are coming up with all sorts of crazy new concepts, and it is very new. It is very immature of a space, 100%. But it is exciting to look at.
Yeah, I haven't heard about OTF per se, but there was a big. Oh, okay, I've heard about Instadap. They have this thing that I think they just released it yesterday or 2 days ago called Avocado Wallet, and the way it works is it will abstract away like all the cross chain bridging that you have to do. So you'll basically have a wallet. You won't have to like change the network from Polygon to Ethereum to Arbitrum. They'll just redirect for you. They'll have the router. Everything will be like abstracted away, and your gas will be denominated in USDC. And I mean, I'm sure a lot of people have a lot of things to say about USDC, but from an end user point of view, it kind of makes sense, right? You don't want to have to like think in Gwei or some other weird like denomination. So it looks good, and it seems like there's a greater focus on the wallet experience. So I'm excited for that.
That's a great point. Yeah, the OFT seems interesting, and it's a standard DAO. So it's a new like token standard that would be. Oh, sorry. Go ahead, Emmanuel. So go ahead.
Yeah, thanks, Jess. About the concept of bridges and everything, I remember last year, I can't remember which panel specifically, but I was speaking with the VP of engineering at Harmony One and a couple of VC partners who were focused on that particular vertical. And the major conclusion I landed on, which I tried to echo to everyone in the conference, was pretty much that the primary thing we need to focus on when it comes to interoperability is being able to risk assess, being able to understand who are you trying to interact with, what chain are you trying to interact with. How do you know that moving your tokens from this chain to the other, you're not at risk of like, say, that chain forking away from your valid transaction? How do you know that the chain isn't going to act against you? And so we need to be able to generate risk profiles and, kind of build a kind of decentralization index where we can look at the chain and know, okay, this is the level of decentralization, it has. So these are the cautions you should take when you interact. The same way we do when we travel. If you're going to, if you're going to a developing country, the U.S. embassy gives you all of these, notifications and stuff. And that's something I focused on. And at the time, the VP of engineering of Harmony One, he felt that, it was too much work. 24 hours later, the Harmony One chain bridge gets compromised for like over, I don't know, 600 million.
My God, you're telling us that like we don't know here. Like, come on. Okay. Go ahead, keep on. Bring up the old wounds.
Yeah, so I literally turned around on Twitter. I was like, what did I tell you? Okay, this is the stuff I was saying. We're kind of moving, we're putting the cart ahead of the horse when it comes to bridging, and we're constantly paying the price for it. And it doesn't matter. And that's the humbling thing about science and tech and research. There are two things. You can either have experience in work or you can have access to knowledge and research. Okay, and no matter how much experience you have, you can't have all the knowledge. So sometimes you will find people who might be less of experience than you, but then have that time, that dedication, that focus to look at the little kinks that you're not looking at. Now, about the layer zero thing here as well, I will be very cautious about that because Presswitch, who currently leads the Nomad Bridge, who, yes, they also got compromised, but he's not a Nomad, he's been all through, like his life spin has been all around interoperability, and he's frequently brought out certain key security vulnerabilities within that layer zero ecosystem, particularly as to how they tend to have a certain monopoly over the Oracle data, the Oracle configurations and how people use them. The TLDR is pretty much like, if you're using layer 0, make sure that you always modify away from the default settings. Because if you do not, layer 0 has the ultimate power to just mess with you. I'm going to pin his findings to the top. He wrote a very well written out, what's the name? Security assessment report, where he points out 2 vulnerabilities around these things. So for layer 0, you need to be cautious. But then what can you do? Everyone's chasing after vertical, then they build up enough hype, they build enough, funding from VCs, and these VCs have to protect their bag, so they push it. I'm gradually becoming this anti-marketing person, because every single time you peel through the windows and you're like, oh, it's not really so. And 9 out of 10 people are, pretty much unbeknownst to that. So just something to keep in mind when it comes to bridging. We're still very far away, and until we have standards around interoperability, i.e. decentralization indexes, risk assessments on which chain to interact with, there would always be mayhem. And I'm going to put a pin on that.
I got to bounce. Jess, Tammy, Dow, thank you for having me. Everyone, it was a pleasure. Have a good one.
Thanks for coming up.
Have a great weekend.
Yeah, have a great day. Yeah, I think that goes to I've been hearing some of the FUD from Chris Black after that Oasis protocol. Basically anything with a multi-sig is vulnerable, right, to either hacking, or in the Oasis protocol scenario where they were ordered to work with Jump to retrieve hacked funds. So most of the bridges are controlled by multi-sigs, which was the case with Harmony. I know he was fighting Polygon. I think it's 4 out of 5. 4 out of 5 signatures would be to hack. Is that correct, Al? Is it 4 out of 5?
I think it's 7 now.
7 now, yeah. So you would need 7 to compromise, the billions or of liquidity that they have in the network. Go ahead, Dow. Oh, I'm sorry, Dow and then Cuds. Yeah, go ahead.
Yeah, Chris Black got smoke for every chain. Name your favorite chain, he's got smoke for it. But actually, it was interesting. Had him on Farmers Market on Wednesday, and he made a lot of great points. And I see you, Hector, in the audience. I think these guys became BFF to some extent. There was a few disagreement, but I think you guys were 99.3% in agreement. But I think his general take is that, and I think Emmanuel said something similar, which is, there are narratives that don't get questioned enough. And then the reality is the users don't really understand what you just mentioned, like the 4 out of 5 or maybe 7 out of or 5 out of 7 multi-sig wallet that, they can actually revert the transaction and block you if they want to. There is a desire for decentralization, but it's really hard to implement it, and it's really hard to get mass adoption while staying true to certain ethos. So yeah, I just want to say he's one of those guys. If you're a skeptic or if you're trying to learn, Chris Black, Black is BLEC. He's a good guy to follow.
Yeah, I think you missed a space he had last night. Is USDC the end of Ethereum or some shit like that? It was doomsday. Yeah, it was doomsday for...
It's always doomsday with Chris Black. That's the only thing I don't like about him. Is the end of the world is every day. So
yeah, go ahead, Cuds.
Well, the last doomsday I can remember outside of today, I don't know if anyone's privy to what's going on with SVB, but they've literally just shut down Silicon Valley Bank as of 20 minutes ago. This is likely a pretty big doomsday event for the U.S. and macroeconomy, the second largest banking shutdown in U.S. history. But I do recall the Harmony Bridge exploit because it was at NFT NYC, which I was there on behalf of Harmony, helping with PR and messaging for the CEO. And
man.
Yeah.
Wait, you were part of Harmony? How do we not know each other?
I'm sure we may, Jess. Steven and Lee and all of those good folks were a major part of my 2022 up until that exploit. But yeah, right now, if people aren't kind of following the headlines, you should definitely try to get an understanding of what's happening with SVB and Silicon Valley Bank. Not to be a doomsdayer. I'm generally an optimist. I'm a pretty high energy person, but this is very reminiscent of '08, just because we had Silvergate, another bank shut down, and 2 banks in 1 week go down is not a good sign. And crypto was not the stressor. And in fact, for my company, we did not even get accepted into Silicon Valley Bank, as we were too high risk for them being crypto adjacent. However, I have a former company and startup where we still have an open account at SVB, and the founder is sending emails to investors and employees now that he thinks we're good, because we didn't have more than 250K in that account. But this will put a lot of strain on the broader ecosystem, even for crypto and Web3, because most of these whales, most of these folks that facilitate a lot of movement, all have some sort of relationship with SVB. Essentially, SVB, if you're a general partner, a venture partner, or even a founder, they'll often allow you to take loans against your shares in a company, and a whole other host of services that seem to be now at risk or shut down. So try to follow along and see how it impacts the market. All the more reason that we need to go bankless and decentralized these services. Not that I'm the biggest DeFi fan, but it's clear these bankers never learn. It's like every few years they somehow engage in activity where they either need a bailout or some sort of support, in which case essentially that's what's happening now. California residents are going to have to bail out SVB.
I posted it. You're exactly right, because I posted it to the top. Nico had shared with us the statement from FDIC that they in fact had shut it down today, and that people will have access by Monday, the 13th, to their, and it is a play on words, to their insured funds. So, the standard 250, and then they're issuing certificates to people for the uninsured funds. So if you guys want to take a look at it, I did just post it to the top.
Yeah. So if you had over 250 million, shit out of luck. If you were broke, you're probably gonna get your money back. But what I did want to point out,
250,000, Jess. So 250,000.
Oh, 250,000. I'm sorry. What did I say? $250?
I knew what you meant. No, you said million. I knew what you meant, though.
It's starting to get to the end where I started to get hungry, and my mind is not straight. But what I was going to say is that I don't know if you guys saw that commercial that Coinbase put out. I'm not a huge fan of Coinbase, but the commercial was awesome. And I like, from a normie's perspective, I did pin it to the top if you want to check it out. Like, all the shit that we have to deal with, like, yeah, the basics, like the whole ATM thing. Like, why the fuck do I have to pay money to take out my money, and just stupid shit. Great commercial. I do give them props on that, even though I'm not a huge fan of Coinbase.
Yeah, I love the ad because they focus on the pain point, right? Like, when we try to sell people about crypto on the gains and the ideology, like, it's most people are like, okay, whatever. But when you pay attention to the pain points, like, hey, if I want to do like a wire, is going to take you like 3 to 5 business days, it doesn't make sense. And why you I like the point where they say, like, you're paying for the privilege of taking out your own money. There's a lot of things in that ad that I think was so well put together that I hope it become like a mainstream ad. And I think Coinbase in that context is ready for taking the lead and being kind of like the leader or thought leader for the industry. Brian Armstrong is in Washington now, suit and tie, talking to, I think it was Bloomberg and a few other media outlets in the financial world. And he's not necessarily looking for a fight with the regulators. I think he's open to conversation. But I think there's a great effort for them to be the face of the space. And so far, like, from the ad and from what he said, I think it looks good.
Yeah, I was gonna see I was gonna see if I could play it really quick. Let's see. Oh, hold on. What do I have to do here? Okay, that didn't work. Go ahead.
I guess I'll go. I just found this amazing article. Meta is building a decentralized Twitter alternative. Are you freaking kidding me right now? Like, is Mark Zuckerberg just losing his goddamn brain? Like, the guy just blew how many billions of dollars did they waste on the metaverse before they killed it? And now he's going to try to take on Twitter on a platform that is already similar, but he's going to make it decentralized. Like, I can't with these people. But to the point that Jess was making earlier, and Dow, so it's 2023. Our banking system does transactions through FTP file transfers to this day. Like, it's unfathomable that this is a thing that still happens, and we don't have true electronic transfers. And the fact that we're all dealing with private banking systems that don't expose their ledgers and they don't provide any kind of transparency is insane. It's absolutely nuts. And I'll just leave it at that. Fuck Meta. Actually, Meta's not going to happen. Stop trying to make it happen.
They're apparently failing right. Like, the whole morning, bro, my phone has been going insane. I've never seen what's happening like this. They're failing right now.
Yeah, my phone is on fire. My inbox is wild. This is like pretty insane with the banks.
Yeah.
Yeah, this is gonna be a complete dumpster fire for the next couple of months.
Archaic system.
Mother's maiden name? Ebowitz?
You're telling me this guy is how things get verified.
That's my job.
I'm just saying, you shouldn't have to buy $10 worth of gum if you just want 79 cents worth of gum. Why do you get charged your money to take your money from your account? And if you're out of money, they charge you for being out of money?
What?
An overseas transfer takes 5 days?
Business days.
Why?
What are they using? A Zeppelin?
I deposited the check Monday. But Monday was a bank holiday.
Why is this the way it is?
A bank holiday?
This system, what the bank holiday? Makes no sense.
This makes no sense.
Who designed this system?
Ma'am?
Is this really the best we can do?
Hello?
Don't we deserve better?
Even without the visual, that was so audibly pleasing to listen to.
It takes me back to radio. You know, I don't know if people remember what radio is, but it really takes me back to that.
And honestly, listening to it, seriously, I think I should write down, just from all the years I spent in that industry, all the tips and tricks that I learned from it. And, you know, people going there and thinking that they can withdraw. And I think I've had this conversation, I know, with maybe DeFi Daniel, how much you can actually take out, and how I think people sometimes assume that they have all this money there and, oh my gosh, I can just go in and withdraw it all out. No, it doesn't work that way. So, and then obviously overdraft fees, that's how banks make their money. So you don't have money and you go overdrawn, that is their biggest money maker. Totally free checking with overdraft fees out the wazoo, and then they charge you like $5 a day or however much it is now for being overdrawn. So it is funny to listen to. And I know a lot of you guys are probably too young to remember this, or maybe some of you, but the whole even Y2K thing that came out, there was a huge run on the banks with that, because they swore that the systems were going down and they had to take their money out. I mean, I had people, I was managing a Fifth Third Bank at that time. They were coming in just taking out money in droves. Like, we had to order money. And that's another thing. When you go in to take out a large amount, they're going to tell you you have to wait a week, because they actually have to order that money and get it into that branch location that you're at. So just food for thought.
Yeah, I think the line that's the funniest for me is, like, they charge you for not having any money. Like, how does that make sense? Like, you have no money,
Right.
but we're going to charge you for not having any money. Motherfucker, why did you authorize the transaction then? Sorry.
And they'll drag you, and Jess, they'll drag you further down into the hole. That's the whole objective. They will deplete you and much, much more.
Hector, welcome. What's up?
What's up? Just watching SVB going to zero. The FDIC has stepped in. I think California has stopped them from banking. So everyone who is involved in that hopefully will receive what they're due, thanks to the FDIC insurance, a TradFi beautiful thing when it works that doesn't exist on crypto. Yeah, but for the most part,
Do you ever have anything good to say about crypto?
for the most part, no. Besides like pumps, those are fun.
And honestly, even with the FDIC insurance sector, I mean, there are some that won't get all, if they don't fully understand FDIC insurance and how it works, they may not get all their funds.
Oh yeah,
Just
for sure.
FYI.
Like that's for sure. You don't. There's a limitation, and there's a limitation on the people. Like, I mean, the amount of accounts you can have within an institution, and so yeah. Hopefully, people did it the right way. But
So apparently, early numbers are saying they're negative 67 billion, bro. This is insanity. I don't
yeah,
even know what anybody's looking for
they
here.
tried. If you're talking about SV Bank, they tried to sell themselves this morning, or they tried to raise funds. So they try to dilute their shares. So they try to create a secondary offering by selling more shares to other investors. But the investors found out what the hit was, so they weren't willing to take on that. So instead, they're like, "Well, can we sell the remaining assets to someone?" And no one is looking to buy it. So as of right now, they've been shut down in terms of operating as a bank. And last I've heard is FDIC is stepping in and trying to make whoever is with SV Bank to, give them the insurance that they're due. But
And I will say this, with what you said, to your point, Hector, no one is looking to buy it currently, but what will happen is they will step in and they will want a larger bank to come in and try and take them over. Mark my words, you're probably going to see that happen.
Great points, Tammy. I do see Daniel up here. Welcome, Daniel. How's it going? I know you dropped a message earlier that this room was too happy-go-lucky for Ethereum. Were you expecting more ETH FUD today?
Yeah, I thought I went into the wrong room. Like, what the hell is this? It's too Ethereum friendly, and that's not typically the case. My experience, this is a toxic Binance and Solana maxi room echo chamber.
Daniel, it's going to
But
zero. Don't worry. The New York
No,
Attorney General has already tried to make a claim that it's a security, so therefore you're kind of cooked.
no, that's fine, dude. I'll pay
Yeah,
a
what do
fee.
you think about the recent news of Ethereum is being lumped in with Luna and UST and the new lawsuit against Kucoin?
I'd say finally, let's make it a security, man. Let's open it to the whole world. Let's have everybody have Ethereum in their wallets and make it take over the Swift, Let's just finally kind of like settle it down, make it a security. Everybody has Ethereum. Everybody transacts on L1s and moves the shit to L2s. That's like, that's the ultimate goal, man. That's it's fine. I'm embracing that. Imagine the opportunities. It's no longer this kind of weird fucking shit that people do on the on the dark corners of the web. Now it's open to everyone. Every bank can just fucking.
Is that why you were on Nostra the other day?
Did you put tequila in your coffee today?
Every bank can hold it in their balance sheets, and it's open. And let us fucking do it, man. Let's go.
Just looking out the
So
window
here's
right
the
now,
FUD.
talking nonsense.
Wait, I got some FUD. He wanted some FUD. So look at the post above. So if ETH was worth the same value as ChatGPT, it would be worth $350,000. So what do you think has more value, AI and ChatGPT or Ethereum? Is Ethereum overpriced?
They are two
Completely
different
overpriced.
things, It's no, it's not overpriced, man. Come on, it's not overpriced.
This is just a 99% markup. That's all.
The fact that ChatGPT created an atmosphere for Bing to empower itself is unconscionable. Unconscionable.
I don't know what that word means, but I'll go with that.
It means it's beyond belief that Bing is now a contender for
oh, I know
for fucking anything.
Now,
should I ask ChatGPT how much they think Ethereum should be worth?
Yes, please.
Let's see.
Actually,
Go ahead, Daniel.
no, yeah, please do it. That's an interesting take.
It won't give financial advice, but because it's a security, so I can't talk about it.
Listen, guys.
DeFi Daniel, well, just
But wait, Kristen Gillibrand yesterday said that it's a commodity.
Well, she clearly doesn't know what she's
she's
talking
pro
about.
crypto. She's pro crypto. But that's because she wants Circle to win this entire thing. She wants that CBDC pretty much.
And don't forget the 2 class actions that are coming against Robinhood and Coinbase.
Oh my God, she won't give me financial advice. He or she.
When he was a boy in Bulgaria.
Who was a boy in Bulgaria?
Wait, are you
Do you
saying
remember
that?
Vlad's little defense? When he was a little boy in Bulgaria.
He still left us hanging both times.
Yeah. I think he's trying to put it together with Hector's comment, and I'm not getting it. It went over my head.
Well, we're used to Ethereum people leaving us hanging, right, with all these delays.
Jess, ask Dan. So don't use the regular GPT. Use Dan. Dan breaks all the rules. He'll give you financial advice. But DeFi Daniel, with what you said, I like the optimism you have for branding Ethereum as a security, but it's gonna get pretty ugly before it gets printed. Pretty much everything would have to stop. You would have to run all of these accounting and auditing and checks and everything over the past how many years that ETH has been live to punish the people that they think need to be punished before they even allow them to redefine and say, okay, now that we've got that sorted out, you can go on the stock market or something like that. So it's going to be really messy before it gets pretty. I think you fast forwarded to the happy part.
In the U.S., right?
No,
all this conversation is irrelevant in the U.S.
Exactly, and be my guest, right? Just do it, man. Imagine all the new employment that is gonna, generate, fucking people. Who knows? They're gonna look into him fuck this shit. I can't deal with this, and so they're gonna be my guest. I'm saying it's just to go for it, man. It generates more employment. Do it, dude. More people get back to work. Do it, man. Good stuff, right? It's all good stuff. I think eventually the market will decide, and eventually I'm pretty happy with where Ethereum is going long term. And end game for Ethereum is, I don't want to go there because I'm gonna sound crazy, but no, it's fine, dude. It's cheap right now. It's gonna get cheaper probably, because the market goes up and down. Gives a shit, right? But dude. Do you think? You think all these people around the fucking world that are building and doing all this stuff, all these job creations, and even the traders, people that really go long and short and make fucking a killing, they're all gonna say, "Oh my God, yeah, you know what? Yeah, I'm gonna give up on all this. We're just gonna go back to the grind and do some fucking other bullshit that no one wants to buy or, it's all good, man. You gotta think long term." So one point, I'm in Mexico right now, right? Came to visit family, so I kind of miss a lot of the
Yeah, it sounds like you're in Mexico. A little early morning margaritas.
And not only that, just
you're not saying no.
Everything makes fucking noise. I couldn't when you were calling me, there's noise in the background. Now there's some noise over there.
Still not saying no.
Yeah.
If we were doing this on Nostr, it would have been better.
He saw his portfolio. He just had to open the bottle of tequila. There was no way,
dude. Yeah, I don't want to go there, but it hurts. But okay, my point is here in Mexico, in this area, no one knows what the fuck is the Bank of Silicon Valley. No one knows what that is. No one knows what's happening.
I didn't know what that was yesterday.
Yeah, no one gives a shit. No one cares.
None of us.
Life goes on. So find your inner Mexico in this dark times. Find a place where
Where are you in Mexico? Are you in Mexico City or on the beach? Where
I'm by the beach. Yeah.
Google Maps right now.
Yeah, so no one cares, man. People just want to go out and fish the next thing for tomorrow and be happy, So find your inner Mexico.
On that note, Mexico is rumored to want to join the BRICS. So I think that context of the conversation where people are U.S. centrics and the world is moving from unilateral reality where the United States says and the rest of the world follows to a multilateral world where the BRICS, which is including Russia, China, India, South Africa, and there's 20 more countries that want to join, right? There's Brazil's already there, but there's Argentina, Saudi Arabia, Turkey, Nigeria, Indonesia. They're applying to be part of the BRICS. So if the U.S. want to do on their own little corner of the world that everything is a security but Bitcoin, that's fine. In the meantime, the BRICS central bankers are talking to each other. And even in France, the Central Bank of France was working with the Swiss bank and the MAS, some kind of financial authority back in Singapore, to work on CBDCs. And they were using an AMM. They were talking about being liquidity providers on the AMM. This is happening in Europe, in France, Switzerland, and Singapore. Meanwhile, the United States is it's all security. So if you want to go that route in the United States, fine, but the rest of the world will move along.
Mexico will never join BRICS. First of all, they're a direct, like one of the largest, I guess you could say, allies of the United States in terms of trade. So, USMCA. Come on.
You said Mexico will never join BRICS?
No.
Their president is not so U.S. friendly.
All right, guys, we're getting almost to the top of the hour. I have a hand up. You guys are talking about Mexico. Enjoy your tequila. Enjoy your time off. Why are you on Spaces? Go take another shot. But no, thank you for coming by, Daniel. We always appreciate you. You know you can't get enough of us. And we look forward to your future Nest Spaces over there on Nostr. You are the #1 Nest host on that app. Pulse, what's going on?
It's good to be here. I actually have a question that'll swerve things back into crypto, and I'd be curious because we've got enough speakers here for some opinions. I do know one bullish thing that's actually still happening in crypto, but I never hear anybody talk about it. Reddit NFTs and moons from our cryptocurrency. Those are both something that I pay attention to. I'm curious if anybody in here is either paying attention to what has gone on with Polygon and the Reddit NFTs over the last couple of months, anticipating the Gen 3 drop that's getting ready to happen, or accumulating moons by participating in our cryptocurrency, because they've actually been the only thing that's not been affected by everything else. And I haven't heard a large group of people talk about this. So at the risk of sounding like a Reddit degen, is anyone here into that stuff?
I haven't gotten into the Reddit NFTs. I'm not sure about anybody else, but I do know there's been like millions of them minted. As far as like Polygon itself, I do know that the Starbucks stamps dropped yesterday. I was like 15 minutes late and it was sold out. I did hear that there was like some UI problems, which still kind of frustrates me with some of these Web2 brands, because you did have to like buy with credit card and stuff like that. So by the time I got off my meeting, looked for my freaking wallet, which I barely use anymore, and, pulled out my credit card, it was sold out. But no, I'm not. I don't know. Is anybody else into Reddit NFTs?
I think I minted one for my profile, because they give you one for free.
Yeah, probably one of the free ones for either the World Cup or for the Super Bowl.
Nope, I didn't get one.
Why would I want to buy a Reddit?
I got the Super Bowl and the regular one.
Right. So they've done 2 free drops. They did a World Cup drop where you could choose a team for the World Cup and you could mint a free NFT to your Reddit vault. Or they did a Super Bowl drop where you had a choice between 4 separate NFTs related to the Super Bowl. Those were the free drops so far.
Yeah, and they've minted over like a million of them.
Correct. They're actually responsible for more wallet creations right now with the vaults, the amount of wallets that they've created. Polygon has actually changed their front page to the Reddit avatar collection. That's how big it's been for adoption purposes. But even Reddit hates it. It's funny. It's like Reddit is not fully adopted this because most of Reddit still hates it. But there are a huge group of people that are very into it. And I'm just wondering, because there are occasionally like Twitter influencers that show up and they're like, what the hell's going on over here? Like, this is the only project I see, with volume on OpenSea or stuff like that. So I'm just interested to know if anybody's paying attention at all to the drop that's coming up.
Yeah, I think I've heard about it. Just hasn't. I'm not too much of a NFT like mentor, but Active came up. I know she might be dabbling in that ecosystem. And guys, I am going to ask you guys to keep it short because I do have to wrap it up in 10 minutes. But go ahead, Active.
Thanks. I just pulled in. Can you guys hear me? It said connection was lost on my end.
Yeah,
Okay, good.
Sound good.
Okay, so I just recently started dabbling. Well, I was on Reddit for other things, and I've been on there forever, but never on there. And I could get this PFP. I don't know if it's an NFT. However, how does one know that? Like I know.
That's a great question.
Yeah.
Great question. Reddit did two things very smartly. They don't call them NFTs. They're called, they call them these avatars, which we all know what that means. And you don't get a wallet, you get a vault, but it's actually a wallet. So that you get NFTs in your wallet, but they call it an avatar in your vault. That's how they've gotten around it because NFT is still a dirty word.
So where do you find your vault? Because like I did customize this PFP or whatever, but I don't know if it's just like a stand-in for a real one or what. It's a little bit.
You should have in your profile, you'll have an option to see your vault. And they've been improving the UI for that, but your vault will display your NFTs as well as any of the 3 cryptocurrencies you can currently earn for participating on Reddit. There's Moons, Bricks, and a third one that I'm forgetting right now, which I should be able to remember.
And is their main marketplace OpenSea? Sorry, last thing.
Yep, right now. But Reddit is very much working on their own NFT marketplace, which is going to blow things wide open, I think, when they finally get that ready.
Yeah, thanks, guys. Great points about Reddit NFTs. Just one more thing about the Starbucks, because you said something that sparked my thought about, NFTs is a dirty word. Like Starbucks is calling them stamps. So I was messing around with Tammy. I'm like, now we're fucking stamp collectors. Like, how did we get here? But yeah, let's go to NFT Tempo, who's new, and then we'll circle back to the rest of the hands and close out.
Good morning, afternoon, wherever we are in the world, everyone. Yeah, just wanted to sort of chime in on this because, again, we're building a music NFT marketplace. And, again, NFTs are sometimes a very, I don't know, it's a brand with a bit of bad goodwill attached, I think. So the way we're sort of solving it is we're referring to them as music tokens. That's what they are from a legal perspective. And that's how we essentially manage the business end as well. Because, obviously, we do have to abide by securities legislation in the US. So that's one way of essentially not fulfilling the common enterprise test. But yeah, I think, when it comes to the Reddit NFTs, I think it's a very interesting case study because I think it's just a mere evolution of like the basic attention token from the Brave browser. It's a way of essentially rewarding usership of Reddit, which I think is a very novel concept. I'm not, massively bullish on the financial side of it, but I think it's a very unique and novel way of providing value in a more sort of tangible way to people using your platform. So I think it's it's very interesting stuff, and I think there's a long way for that to evolve. So yeah, keeping an eye on it myself.
Yeah, thanks for coming by. And sorry, we are getting to the end of it, but we do appreciate you coming. We'll be back next Friday. But yeah, Death, and then Cass, and Emmanuel.
I just wanted to say for the R cryptocurrency Reddit, I personally stay away from them as a Reddit channel myself. They have very strong ties to the Ethereum Foundation from the early days.
Yeah, I'm not much of a Reddit user, but what do you mean they have ties to the Reddit, to the ETH Foundation? What does that mean?
Direct people linking the ownership of the Reddit to the ETH Foundation.
Oh, interesting. Go ahead, Cass.
I was going to say, this is my 3rd reality check of the space today. Y'all got me going. Reddit, yeah, I got to talk to people on the team before they actually did this drop, and we got a little bit deep about Discord and a little bit more of like the culture and the ethos of the space. That's kind of more my my like niche or whatever. But a mass majority of those quote unquote wallet onboards were airdropped. And so just like, I know they always talk about the 2.5 million wallets, but like 2.4 million were like airdropped. So just something to take into consideration. Yeah, so I also stay away from that kind of particular drop. I think to me, though, it was a great marketing and PR play. So that's kind of how I view the space like, what are people doing with marketing? What are they doing with retention? As a result of that marketing, and then what does that mean long term? So yeah, great job of marketing, great job of utilizing avatars, and I think they kind of really started the digital collectible term as well. I thought that was clever, but the overarching Reddit community wasn't super impressed. The Web3 community wasn't super impressed. As I just tweeted just now, like for future marketplaces and chains, if you're not thinking about the creator, then you will not reach the consumer. And so, yeah, we'll see what people do over time. But chains and marketplaces need to not forget the creators, or the consumers will be very limited and that ecosystem will be very small. And if your goal is to be small, then great. If your goal is to scale and help more people and grow community, then you might want to rethink that.
Great points. Great points. Go ahead, Emmanuel.
Thanks, Jess. So I want to circle back on the Silicon Valley Bank thing that was shared with it. So just to give perspective to people, Silicon Valley Bank is to traditional startups what Silvergate is to a lot of crypto companies and exchanges. So pretty much it's the backbone, or it's the popular backbone for a lot of startups in the NYCSF community. I'm not sure how many of us are very active with the VC founder community, the VC and startup founder community in New York, but then most often than not, you are dealing with Silicon Valley Bank. So like this is pretty bad for the startup industry as well. For example, founders or companies that are like incorporated in the US but are not based, like they're non-citizens, they're non-residents, so they don't have like a social security number, they are screwed. Because Silicon Valley Bank was like the only bank I know in the US that was actively, accepting, clients of that nature. So now these founders have to think of like another bank to move to. They now have to like reorganize and redo everything now. So it's a mess. It's a huge mess. I know I'm in a bunch of Slacks and Telegram chats with a few, different startup teams. And there's quite a few people panicking right now. A lot of Indian founders are panicking right now. A lot of the folks down in in Africa are panicking right now. So it's pretty bad. I know we're like, we're in crypto and no one knows what Silicon Valley Bank is, but it's not great. Let's just say DMs are blowing up right now, like chat groups are blowing up right now, and it's not for the right reasons, and it's sad. So just to give some perspective to like the startup VC world outside of crypto.
No, great points and great perspective. Nico, I'm sorry, I do have to go. I have to jump on a call. I do want to give a chance. Dal, anything you got going on this week?
Yeah, next week we'll be on Farmers Market to talk about optimism, the OP stack and the super chain right after the Coinbase announcement. And yeah, this was a great space. Love the interview with Fire. I'm already using it. So if you were there in the first part, or if you weren't, definitely listen to that interview. That was great. And just obviously because of a lot of negative news, we also touch on the Shanghai fork, which is happening in the first couple of weeks of April. We touch on ZKVM, which is happening in March 27, and the small wallet. So there seems to be bullish, right? It's not all bad. So yeah, just to say that.
Great perspective. Yeah, people are still building. Tammy, what about you? What you got going on this weekend?
Just some in real life stuff with the friends, and next week heading out to LA for a short trip, so that I am looking forward to. But yeah, just to Dow's point, do yourself a favor, go back and listen to the beginning, because that is a great option for people. I plan on getting in there. I just didn't have time myself, so I'm gonna sign in and sign up as soon as I get out of here. But also as well, please do yourself a favor with all the negative news, like Dow said. I take this as an opportunity to educate yourselves on, where your money is and how it is covered, because there's a lot of people that still don't understand that. So I just strongly suggest that you all do that. But I hope everybody has a great weekend. And obviously I look forward to these every week. It brings so much knowledge. So I appreciate everybody that contributed and everybody that came.
Yeah, sorry, Tempo, I got a hard cut off, but thank you to all the speakers and to all the listeners, and my dogs are barking in the background as well. And we'll be back next week, next Friday, 10 a.m. So I hope to see you guys here. Thank you and have a great weekend. Bye.